Welcome to the Monday edition of the Tech Stocks Daily Podcast, your one-stop audio fix for all things buzzy in the tech investing galaxy. Today, we'll unravel Apple's shift to India and an eyebrow-raising $95 million Siri drama settlement. Cash back on those sound waves, anyone? We'll then decode Baidu's scintillating stock show on NASDAQ, where sky-touching analyst upgrades might just tickle your buying nerve. Plus, buckle up for AT&T's electrifying metamorphosis as they gleam with a 5G and fiber makeover worthy of a telecom Oscar. Whether you're shopping for stocks or just peeking over tech's financial horizons, this episode's packed with juicy updates and spirited market gossip. Stay tuned because you won't want to miss these thrilling market twists and investment tips. Buckle up, tech enthusiasts, because today's spotlight is firmly on Apple, and it's brighter than ever. Let's dive in and explore why Apple has been a hot topic of discussion, lighting up the tech news scene and financial chatter alike. First up, let's talk tariffs. Apple is facing a whopping $900 million hit, slapping their fiscal outlook for the June quarter right in the wallet. This trading turbulence can be attributed to CEO Tim Cook's somber announcement during the recent second quarter earnings call. Cook noted the expected surge in production costs due to global tariff policies, primarily affecting Apple's pricing for its loyal, US-based customers. What's Apple doing to keep the iPhone train on its tracks? In a plot twist worthy of Apple's next dramatic product reveal, the company has taken a sharp turn towards India. Yes, the world's largest democracy is slated to become the new gold mine, producing most of the iPhones sold in Uncle Sam's backyard. With China no longer being the friendly neighborhood iPhone-producing giant, Apple's looking to Vietnam to lead the way for iPads, Macs, Apple Watches, and AirPods instead. All this shuffling results from those heavy-duty tariffs slapped on Chinese imports. As if that wasn't enough Apple-tastic news, we're hearing whispers that Apple is planning to issue investment-grade bonds in up to 4 parts. Depending on Treasury movements, these 10-year bonds are expected to be priced about 0.7 percentage points above Treasuries. Keep your eyes peeled, investors. Apple bonds might just be the shot in the arm your portfolio needs. Moving next to a thrilling courtroom-sized piece of news, Apple's spectacular $95 million settlement. That's right, some iPhone users might have the cash registers ringing soon. Amidst accusations that Siri was moonlighting as a secret agent, recording private conversations without a hint of permission, a class-action lawsuit led to this juicy payout. If you were a proud owner of a Siri-enabled device between September 17, 2014 and December 31, 2024, you might just snag a slice of this settlement pie. Up to $20 a device, 5 devices max. But hurry, you need to stake your claim by July 2, 2025. Meanwhile, stay tuned for Apple's futuristic magic trick, introducing a new iPhone release schedule come 2026. Word on the street is that high-end models like the illustrious iPhone 18 Pro and rumored foldable variant will hit shelves in the fall, while budget-friendly versions launch in spring. This beats Apple's historic tradition of a synchronized September spree, promising a fresh, staggered release strategy. Stock-wise, this whirlwind of changes has impacted Apple shares, which dipped by 2.45%, settling at $200.31. But fear not, intrepid investors. With Apple's reported revenue smashing expectations at $95.36 billion this past quarter, eclipsing Wall Street's optimistic $94.53 billion estimate, the company's still got plenty of cards up its sleeve. And there you have it, a juicy slice of the Apple pie. Keep your tech-tuned ears peeled for more updates as Apple continues to navigate this evolving digital landscape. Hey tech lovers, today we're diving deep into Baidu, the Chinese tech giant, which is making waves on the NASDAQ with some impressive market maneuvers. If you're into stocks, financial analysis, or just wondering how Baidu's popping in the industry, buckle up, this one's for you. So first off, Baidu is getting some major attention from investors and analysts thanks to its valuation. When stacked up against other big names like Shopify, Baidu seems to be holding the value torch pretty high. With a Zacks rank of 2, it's signaling a good potential buy for value investors. Why? Well, a major reason is its forward PE ratio of 8.92 compared to Shopify's jaw-dropping 68.45. It's like picking a modestly priced, fashionable jacket over some high-end designer piece when flipping through investment announcements. Seriously, if you're into digging for gold nuggets, Baidu's lower PB ratio of 0.83 versus Shopify's whopping 11.12 makes it even shinier. But wait, there's more. Baidu's also flexing in the tech sector by outpacing its peers. Move over average computer and technology stocks. Baidu has basically left y'all in the dust, reporting a soothing 6.7% return so far this year, while the sector's average return tumbled into negative territory at minus 7.3%. If you're scratching your head wondering why this gap exists, thanks solid earnings estimates revisions for Baidu, they've seen a tidy 10.7% uptick in estimates over the past 3 months. Analysts are raising those eyebrows in their expectations. Now let's touch on techie trends, technical analysis trends, to be specific. Baidu is not only a number game champ, but also proving its technical worth. Just recently, Baidu blew past the 50-day and 200-day moving averages, glowing neon signals for bullish sentiments. This means investors might want to catch the party that seems to be gaining steam. Let's be real, technical and fundamental setups like these in the stock world are what one might call a perfect blend of luck and skill. Baidu's hitting the right support levels, and the bullish vibes are being confirmed with positive revisions. 2 higher estimates versus 0 lowers, impressively priced to ride higher. Bottom line is, whether you are a stock market wizard or simply someone curious about where big tech is headed, Baidu's current trajectory makes it worth watching. Is it perfect? Nah, no stock is. But with these flourishing fundamentals and technical indicators, Baidu sure seems to be glowing brighter on investor radars. Keep an eye out for more stock market spice, folks. Baidu could be setting the stage for tech talk for months to come. So in today's tech wrap-up, we're diving deep into why AT&T stole the spotlight in the tech world. Buckle up because there's a lot to unpack, and trust me, it's like binge-watching a series that's getting juicier by the minute. First off, AT&T's recent performance has gone from dial-up days to FTTP in Wall Street's eyes. I mean, we're talking about a nearly 24% surge in their stock price over the past 6 months. Like what? That's a hefty lift compared to what's happening elsewhere in the market. Seems AT&T has been burning through their competition wires and expanding their 5G wizardry and fiber networks like some telecom sorcerer. But here's what's keeping the buzz going. AT&T's decision to focus on core elements like 5G and fiber infrastructure while dumping media leftovers like a hot potato. Their rebound strategy is akin to eating kale, good but necessary. This shift boosted their relevancy in high-speed connectivity and opened up cash flow, even enabling some seriously accelerated future fiber expansions. AT&T's plan is to have over 50 million fiber locations by 2029. Looks like they aren't kidding around. Meanwhile, what's interesting is how they are dealing with legacy network issues. They are swiftly migrating from old-school copper to more advanced 5G and fiber networks, trying to maintain momentum by locking in postpaid subscribers faster than you can say wireless roulette. Speaking of which, they added a whopping number of postpaid subscribers in Q1 2025, providing a nice fluctuation for that stock chart. Yet life isn't all about golden routers and freshly laid fibers. AT&T, despite the great subscriber traction, has some headache-induced roots. They've been facing artillery from all ends, price wars with communications gurus like T-Mobile, the precarious macroeconomic landscape, and trade wars threatening to hike up infrastructure costs. All this makes the observer wonder, is AT&T deftly dodging bullets or walking a wire? Financial-wise, AT&T fans got another reason to applaud them for better cash flow management. However, turning around a mountain of debt that could rival their skyscraping coverage towers is still an ongoing battle. The real kicker? They're planning to launch a $10 billion stock buyback by 2026, giving investors butterflies and a few wink emojis. Anyway, I want to know what think. Has AT&T finally figured out the secret sauce to telecom success, or is there a concoction of challenges ready to boil over? And is AT&T in your portfolio? Or do you reckon the cost-cutting spell only goes so far? Leave your 2 cents or kilobytes in the comments. Let's get the conversation going. All right, tech lover, let's break it down. Let's talk about Baidu today. So would I buy, sell, or hold Baidu based on what's popping in the news? So here's the skinny. Baidu is lighting up NASDAQ, catching eyes with incredibly attractive valuations, especially when pitted against rivals like Shopify. With a forward PE ratio of 8.92, it stands as a beacon for value investors who love to nab stocks with potential growth without breaking their budget. The value indicators, like its lower PB ratio compared to Shopify, make it an attractive proposition for those looking for a solid long-term investment opportunity. Moreover, Baidu's keeping its foot on the growth pedal, showing a 6.7% return this year, while its sector peers have stumbled to a minus 7.3%. Add to that the bullish trends from recent earnings estimates revisions, which have gone up by 10.7%, giving more green lights to potential investors. Technically, Baidu's got exciting market movements, moving past significant resistance levels like the 50-day and 200-day moving averages. These are considered positive signs for momentum investors excited for what's on the horizon. Given all of this, Baidu gets a buy from me. With the current setup, both fundamentally and technically, it appears Baidu is in a good spot to aim for higher growth, a strategic pickup for those eyeing value and market gains. But hey, remember, this is just one tech enthusiast's perspective. Always, and I mean always, do your own research and weigh the factors based on your unique financial situation. Investing has its risks, and caution mixed with well-researched decisions will set you on the right track. Let us know what you think in the comments below. Are you snapping up Baidu, or are you scoping out elsewhere in techland? Today's tech activity sure packed a punch, with Apple navigating tariffs like a pro and teasing new production strategies in India and Vietnam. Their courtroom drama added a sprinkle of suspense, while Baidu danced in the spotlight with enviable valuations and impressive market movements. Lastly, AT&T showed us what a strategic pivot in the telecom world looks like as they beef up their 5G and fiber game. If today was a roller coaster, these tech giants were the exhilarating loops. Their moves reloaded our trading enthusiasm and broadened investment horizons. If you found this roundup helpful, don't forget to like, subscribe, and share the tech vibes with your friends. And remember, tune in tomorrow for another exciting episode packed with the freshest tech tidbits.